here's another point of view. So from a doctor's point of view, is they're gonna they get their medical degree and we're
Hmm.
gonna go off and work for somebody, whether it be a local
Right.
office or wherever they don't have a marketing arm. And some of
Right.
these doctors are experienced and they've got a huge set of referrals coming in.
Hmm.
Others don't. And that doctor that doesn't have a whole lot of business coming in, they may be the best doctor in the world, but they will settle for a cap rate so that they have income
Right.
coming in, because it
Right.
doesn't magically appear without a patient.
Well, let's explain that to people at home because I think what you're saying. Can I just then finish your thought? So basically, for physicians or some physicians, traditionally for the past 50 years, or certainly since Medicare and private insurance has been around, they make their income when they see someone, and every event ideally translates into them getting compensated, often a few months later. But with a cap situation, what an insurance company or a Medicare Advantage company will come to a provider and say, we will give you 500 lives or 1,000 lives, and we'll pay you $50 a month for those 1,000 lives. And I'm making those numbers up, but you're going to get that guaranteed income every month from us, but you are now 100% responsible to take care of these people, whatever issues they have. If they have 10 medical problems, one medical problem, you're basically in charge. So it gives the provider a guaranteed income, which I think where you were going. So I know I'm getting, 50 times 1,000 every month, and I can plan and hire more staff or get a bigger office or whatever I want to do. But in exchange for that, my upside is capped, and all I have to do is make sure we don't spend more money than if we had done fee for service, because then we would lose out. So that's what you mean by if they're not good at marketing and they take a cap contract, that they have guaranteed income, but the risk is being transferred to them, because now the insurance company, the max they're going to pay that doctor is already predetermined. So it's transferring some risk, and the doctor takes some, or the provider takes some of that risk in exchange for guaranteed fixed income. But go ahead, finish your thought. I want to just add that.
No, and I think that the thought from that is that then it can be argued that having a doctor with a cap rate, although you should know it, is not an indication necessarily of the quality of care that you're going to
Right.
get from that doctor,
Yeah,
or
of
whether or
course.
not they care.
Right.
So because sometimes from an economic point of view, that's the right decision for the medical doctor to take, but the consumer should then also know that those decisions can change. In 3 4 years, the doctor can look at the books and say, I'd be better off getting paid on a fee for service. I'm not going to accept this insurance anymore. I'm going to go off to these other insurance
Right.
companies. And now the consumer who has that insurance policy may like that doctor, and they're faced with, if they have an Advantage plan, faced with the decision of changing
Right.
insurance companies or changing doctors.